Are online certificate of deposit safe? Certificate of deposit (CDs), whether purchased online or at a brick-and-mortar bank, are perfectly safe places to stash your cash as long as you follow these rules. Make sure the money in your CD is federally insured against losses by either the Federal Deposit Insurance Corp (FDIC) if it's a bank, or by the National Credit Union Administration (NCUI) if it's a credit union. Almost all legitimate financial institutions are insured by one or the other. Make sure you are dealing with a legitimate institution and not a scam. Granted, scams are more easily pulled off online than off. Read the fine print. Most cities do not have fees attached, but there is a penalty for withdrawing your money early, and the amount of that penalty is up to the bank. Certificate of deposit are popular products for savers looking to put aside some money for the short term in return for a better rate of interest than an ordinary saving account usually gets. If it is FDIC insured, as almost all banks are, CDs are considered among the safest investment available because the investor cannot lose the principal, as is all too possible in the stock market, and because the principal is insured even in the event of a financial collapse by the institution that holds the money. Moreover, the interest rate is fixed and guaranteed. It cannot be reduced during the term of the CD if interest rate in the world at large decrease. It's worth noting that the FDIC has been in operation since 1933 and no depositor has since lost a penny from a bank deposit. Savings deposit versus CD. Your money is equally safe in a saving account or a CD. Both types of deposit are federally insured against losses for up to $250,000 per depositor per institution. A joint CD account is insured for up to $500,000. A CD commits you to leaving the money in the account for a set term, which can be anywhere from a few months to 10 years or more. They usually pay a little more in interest than a saving account. Generally, the longer the commitment, the higher the interest rate. You can get your money out of a CD before it matures, but there's a penalty for doing so. The amount of the penalty is up to the institution, but it can eat into the interest you earn if not eliminated. Where to buy a CD? Like savings account, CD are available at almost any bank, online or off. They are also available from credit unions and brokerage. The CD offered by online banks are just as safe as those offered by their giant corporate peers, as long as their deposits are federally insured. It is very rare for a financial institution, online or off, to not be FDIC insured. A few small banks are state insured instead. If you want to make sure that the bank is FDIC, you can use the FDIC Bank Find database. That said, it always pays to be wary of outright scam. CDs at online banks. When you open a CD with an FDIC or NCUA insured institution, up to $250,000 of your funds on deposit with that institution are protected by the U.S. government if that institution were to fail. The figure is $500,000 for joint account. If you have more than $250,000 to invest, you can split it between institutions to make sure it's all protected. These guarantees apply to online banks just as they do to traditional brick-and-mortar banks. This means that CD at online banks are just as safe as those held with Main Street banks. The online banking advantage. There is a benefit to investing in a CD online rather than in person. It's now possible to shop for CDs at more than 150 banks that accept customers nationwide. This creates a lot of competition to offer higher interest rate on CDs and greatly expands your choices beyond your own neighborhood. The lack of significant infrastructure and overhead costs enables only online bank to pay higher interest rate or annual percentage yields on CDs and other type of saving. Thank you.